My name is Lau Xingyi and my metric number is 293212. Now I will introduce the company background, which is IJM Corporation Berhad. IJM is one of the leading Malaysia corporation headquartered in Selangor and lists on the main board of Bursa Malaysia Security Berhad. It was established in 1983 with the combination of three medium-sized construction companies, namely IGB Construction, Juru Utama, and Muda Jaya Sendirian Berhad. Its business operation encompass concession for infrastructure, plantation, property development, manufacturing, and quarrying. In order to strengthen its position as the largest builder, IJM purchased the Road Builder Group in 2008. There are two ports, Kuantan Ports and Kemaman Ports, and two toll highways, Bersara and New Pantai Expressway, which fundamentally changed the growth and income outlook for IJM Infrastructure Division. IJM has both multiplied industry honors from 2000 to 2017, such as the Malaysian Construction Industry Excellence Award, which recognition of its quality and innovation. At the center of international trade and industrial activity is Kuantan Port, a deep water all-weather seaport that is capable of handling multiple cargo ships. It was founded in 1974 and currently operated by the Kuantan Port Authority. It began full operations in 1984. Kuantan Port was privatized in 1998 and became the property of Kuantan Port Consortium Sendirian Berhad. Its success can be attributed in large part to its innovation, industrial passion, efficiency, and extreme concern for satisfying the needs of its customer. The availability of space and reduce the labor costs are two of Kuantan Port's primary benefits. In an effort to promote environmental accessibility and provide guidance for port development and operation from 2021 to 2013, Kuantan Port Consortium Sendirian Berhad has launched the Kuantan Port Green Policy. The Green Port Policy serves as an outline for designing and implementing a smart, safe, and sustainable port. Its primary tactics of digitalization and energy efficiency are to preserve the port's ecosystem and achieve a 30% reduction in carbon emissions. Next, I will continue to present the Kuantan Port Expansion Project, which is New Deepwater Terminal, NDWT. The expansion project began in April 2015. The aim of this project is to double the port cargo capacity to 52 million tons. It is expected to accelerate the East Coast Economic Regions, which called ECER, transition to establish Kuantan as a primary entry point for investment into Asian and the Asia-Pacific area. With a maximum draft of 12 meters, Kuantan Port 1 can handle ships weighing up to 55,000 deadweight tons. There are two phases to the new deepwater terminal, which is Phase 1A was finished and put into service in 2018, and Phase 1B in 2019. Phase 1S is designed to hold typical ships and cargoes with a basic depth of 60 meters, a 14 meters berth, and a 20 cargo yard right next to it. Phase 1B, which would include a 60 meters berth and a 25 hectares dry boat yard, will be developed with a basic depth of 60 meters. So, how the new deepwater terminal funded? Firstly, we see from the side of equity. The ownership of Kuantan Port Consortium Sendirian Berhad is a joint venture divided 16/14 between IJM Corporation Berhad and Bwbb Group Holding. IJM Corporation Berhad plans to invest approximately 2 billion toward the development of a new deepwater terminal that can accommodate vessels up to 200,000 deadweight tons. After it is finished, Kuantan Port capacity will increase from 26 million tons per year to 52 million tons per year. In 2017, Malaysia-China Kuantan Industry Park, which called MCKIP, plans to invest other 10 billion, bringing its total investment to approximately 23 billion. Second, we see the side of government grants. In 2015, the government set aside 1 billion to construct a 4.7 km breakwater at the port, while Kuantan Port Consortium invests 3 billion to create a new deepwater terminal. Additionally, it stated that a new 4.63 km breakwater at the port is being built, and that in order to facilitate the port's expansion. So this can be said that the government is spending 1 billion on external infrastructure upgrades. The third one is from the debt. In June 2015, the government of Malaysia and Kuantan Port Consortium authorized the Kuantan Port New Deepwater Terminal as a private-public cooperation project. The construction of the new terminal will span 2 years and cost about 808 million in total. Kuantan Port Consortium plans to develop the new water deep terminal in 2 stages, which require an approximate 3 billion investment overall. Both internal funds and loans will be used to finance the development.
Hi everyone, my name is Po Yong Shun and my matrix number is 293534. And the type of the project financing under the M-Bank is bridging loan. What is the bridge loan? Bridge loan is a gap financing arrangement where the borrower can get the access to short-term loans for the meeting short-term liquidity requirements. For example, newly constructed or acquired commercial properties or the qualifications for the long-term financing. Bridge loan is as known as the interim financing, gap financing, or swing loans. Bridge loan bridge the gap during times when financing is needed but not yet available. Bridge loans usually written for equal or less than 3 years with relatively high interest rate and are backed by collaterals such as equity, debentures, real estate, or inventory. It is usually issued by a commercial bank, investment bank, or venture capital firm. The factors that affect the bridge loan amount and rates are typically as a maximum percentage of cost and market type of security and credit history. We have five financial structure of bridging loan under the M-Bank. First is loan amount. The amount is typically based on the immediate financial needs for the project and the anticipated future financing. The loan amount is not less than 250 ringgit Malaysia. Second, interest rate. Generally, higher the long-term financing rate due to the increased risks and the short durations can be structured as fixed or variable rates depending on the market conditions and the project specific. Third is the repayment terms. Flexible repayments with schedule tailored to the project cash flow. Repayment is with due mode of fixed installment and a dependent titles units, which is a yearly. And the fourth is the disbursement. Funds are disbursed in the one or multiple tranches based on the project's milestone or specific needs. Close monitoring and compliance with the disbursements condition to ensure proper use of funds. And the last one is the covenants and conditions. The margin of the financial up to 40% of the total development cost. And the bridge loan drawn is allowed to up to 80% of the value or stage of construction work done as certified by the architect engineer certificate. And the loan agreements include specific covenants that condition to manage risks such as maintaining certain financial radius of the project milestone, regulating, reporting, and monitoring requirement to ensure the compliance and project progress.
From the previous session, we have discovered that our suggestion for our project financing product is a bridging loan provided by M-Bank. We have justified with several benefits for our suggestion. Firstly, we choose this product because of its flexibility in utilization with a large amount of funding. A new deepwater terminal is a massive construction plan that requires large funding to cover different phases of the building process. This product creates higher funding support, starting at 250,000 ringgit Malaysia. It helps to shorten time-consuming problem and also contribute to the projected growth of global trade. Secondly, we suggest this product as it presents a short-term commitment. A bridging loan from M-Bank project financing product is mainly designed for short-term use. A fixed-term loan can effectively present a predictable financial budget to monitor cash flow. It provides clarification regarding a development project payback timetable. Due to budgetary limitation, the developer can enable the effective distribution of resources and quicker financing planning. Third benefit is the reasonable margin of financing offered. The key feature is its margin of financing, which allows bridging loans to cover up to 40% of the entire development cost. It was complying with the expansion plan's intention of moving forward smoothly with the necessary upfront funding. This product is beneficial in facilitating a quicker completion of the development plan and lessening their financial burden. The last benefit is a notable project finance contribution. A bank involvement in the complexity of large-scale project might be an indication of their capacity to determine the sustainability of a project and provide suitable financing options. For instance, M-Bank Group Financial supplied 130 million ringgit Malaysia in project financing for a future financing facility given by Persada Menteri Sdn Bhd (PMSB). M-Bank was also recognized for Best Project Finance Deal of the year 2022. Now we will discuss the comparison to make a clear explanation of why we select a bridging loan for M-Bank project financing product. Firstly, this product provides a larger financing need. It can be advantageous for paying substantial one-time construction costs in comparison to the other project financing products, such as overdraft against contract and overdraft against claim. Compared to this product with a limited funding amount, the project funding of the bridging loan will cover more financial support. Secondly, this product also gives a higher level of compliance with the target schedule. Port development is essential to the completion of the East Coast Rail Link. M-Bank project financing product is more appropriate for the project compared to the other products. It aims to construct a land bridge that will link Port Klang and Kuantan Port. When it can help to ensure the project proceeds smoothly without difficulties, it can satisfy the company's preferred timetable. The third reason for selecting a bridging loan compared to the other product is that it can manage cost effectiveness. In comparison to the other project financing facility provided by other banks, bridging loan may offer a more cost-effective solution. Overdraft facilities are a sort of financing option that offer flexibility, but also come with a higher interest rate and cost. Each charge varies based on the total amount of financing required and used. Hence, the developer can be protected against cost overrun resulting from factors such as unprecedented issue, project delays, and inefficiency when they use bridging loans. Last but not least, we consider the factor of transition to the long-term financing offered by the bridging loan product. The new deepwater terminal aims to timely complete its construction phase and achieve a major improvement in its financial situation under mBank's project financing product, whereby it can guarantee long-term funding. The adoption of bridging loan can be more beneficial compared to the other products to cover immediate expenses. The completion of Phase 2 construction can potentially drive further development as a result of the rapid expansion of KUANTAN Port. Hence, it can lead a company to seek for more favorable long-term financial support.
Good afternoon, everyone. My name is Doris Jong-I-Sin, metric number 293381. I'm going to talk about the risks faced by the bank in supporting the KUANTAN Port project. The first one is financial risk. Financial risk is the type of risk where the interested party may lose their capital on the investment. The KUANTAN Port project is a large-scale project that needs much financial support to support the construction and ongoing operation, which require them to looking for more financial support, such as loan. In this case, the bank may face the loan default risk if the project encounters financial difficulties such as inaccurate revenue projection. For example, if the project expected revenue generating are not met, the project may face the cash flow deficit, which cause them have the difficulty to repay the loan and also increase the potential of loan default risk to the bank. Next one is economic risk. The economic risk is defined as the unpredictability of the future economic climate, which may have an impact on how well financial investment and corporate operation operate. In this case, economic risk brings significant impact to the KUANTAN Port project on the trade volume, shipping activity, the financial stability of port customer, and the economy as a whole. For example, the economic downturn reduces international and regional trade and may result in decreased cargo volume and port earning. Additionally, change in interest rate and exchange rate can raise the cost of borrowing and operating. For instance, due to the fluctuation in exchange rate, the port financial burden will increase if the Malaysian ringgit weaken in relation to the currency used to issue the loan, and it requiring the port to use more ringgit to service the same amount of the debt. Therefore, the combination of higher interest rate and unfavorable fluctuation in exchange rate cause compounding financial hardship, which raise the cost of borrowing and operating.
Good day, everyone. My name is Lau Hui and my metric number is 293532. Next, I will get into the operational and compliance risks that the bank faced when it supported the expansion of KUANTAN Port. Operational risk room rush for banks backing the expansion of KUANTAN Port. Given the intricate nature of constructions and infrastructure projects involved, this venture exposed financial institutions to a spectrum of operational hazards, encompassing potential project delay, budget overruns, and environmental or safety mishaps. To effectively mitigate these risks, banks must institute robust operational risk management frameworks. For instance, in the event of a contractor's delay in delivering crucial components, it is imperative for banks to have a contingency plan in place. This could entail swiftly identifying alternative supplies, negotiating with contractors to expedite deliveries, or even assuming direct oversight of project management to ensure timely completion. Such proactive measures are essential for banks to navigate and mitigate the complexity and uncertainty inherent in supporting development of KUANTAN Port. Besides that, compliance risk is a crucial concern for banks involved in financing the development of KUANTAN Port. It encompasses legal, financial, and criminal exposure stemming from non-compliant with industry regulations, particularly those set by Bank Negara Malaysia. Banks must adhere strictly to prudential regulations, anti-money laundering, and combating the financing of terrorism measures, and other applicable laws. Specialized compliance teams are essential to monitor regulatory changes continuously and update policy and procedure proactively. Additionally, banks must ensure that port development projects are planned and executed in a manner that minimize adverse environmental impact and safeguard the well-being of the public and workers. Non-compliance with environmental regulations could result in several financial penalties, project delays, and damage to the bank's reputation, underscoring the imperative for comprehensive compliance management throughout the project life cycle. By carefully managing these compliance risks, banks can support the successful development of Kuantan ports and contribute to the growth of the Malaysian economy.